Good morning. It's a Friday and you are with us here on Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studios, and Dalal Street is in Friday mood as well. After some intense pain in yesterday's session in the broader markets, we are seeing a swath of green. I am Hormus Fatakia. With me is Vinny Motiwala. Vinny, good morning. We crossed 25,000. We are still there at those levels, but the bigger takeaway is that the broader markets are doing well today.
Absolutely. Broader markets are doing well. Everyone's portfolio seems to be happy. Everyone's going to be cheering the Friday celebrations. So I hope you also will be cheering it as well, right, Hormus? We all are happy it's Friday. Markets are happy it's Friday as well. So yes, good move coming in for the mid and small cap, like Hormus is mentioning as well. We're seeing the bank, Nifty bank, that's also seeing a very good performance coming in today's trading session. Obviously, those RBI norms that we came in terms of project financing, that's supporting some of this up move coming in from the PSU banking side. Whether you look at some of these housing finance companies, PFC, REC, IREDA, we'll talk about more of that later on in the show as well to get more details on that front. And other than that, today when you're looking at sector-wise, also realty, that's also is doing well, managing to hold on to gains of almost 1.9%. Very small percent, Hormus, but commercial real estate developers, project finance comes in for them as well. And those could also see some bit of a benefit coming in. But other than that, PSU bank shining, metal shining as well. Only what's not doing well is Nifty Media. And I think Sun TV not doing well. That is also something that's bringing it down, right?
Sun TV issues of their own, and understandably so that the stock is trading lower today. Not a significant move on the downside as well, just 3.5% lower. But mind you, the stock is down already 35% from its 52-week high. So that has a factor to play as well. But since we're talking of gainers, you will also mention Endurance Technologies. Another day of strong gains today, 6.5% higher on that stock. At the top gainer on the Nifty 500 in today's trading session, nearing the day's high as well. But Premier and Vari Energies, the two solar module manufacturing companies, they are the ones that are putting up a good show as well today. Both of them trading with gains of 5.5%. In fact, Vari Energies did issue a clarification yesterday to CNBC-TV18 where they mentioned that although they have an exposure to the US market, they are focused more on the utility and the industrial side of things, while the bill that Donald Trump intends to pass in the Senate and the House, that one big beautiful bill that focuses more on housing and retail and all of those segments. So they are they are largely insulated from that bill, and as a result of which the stock doing well for itself, as is Premier in today's trading session as well. We'll get to some more gainers and losers in just a bit, but we put the spotlight first up on autos, and that is on the back of some Vahan data for the month of June, where showing registration growth of 6% led by the two-wheeler segment. Sudarshan, who's been on top of this subject right through, is here with more details on this. Sudarshan.
So we are approaching the last week of the month of June, and as usual, like we have tried to gauge the interest on the auto registration, and that is as per Vahan website. So my key question is, will the month of June see growth for total registration of more than 6%, or say more than mid-single digit growth? Because as of now, in the first 3 weeks of June, total registration has increased by 6%, and it's led by two-wheelers, which has seen an increase of 8%. So apart from passenger vehicles, which is seeing a drop of 1%, all the other segments have seen a growth. Even CV has seen a growth of 4%. Three-wheelers have seen a growth of 4% as well. Now talking about the company-wise, which are the major outperformers? In the two-wheeler space, as usual, TVS Motor and Eicher Motors are the outperformers. Eicher Motor in the first 3 weeks of June have done almost 70% of the total sales that the company had done in 2024. It's almost the same for TVS as well. And amongst the four-wheelers, Ashok Leyland from the CV space and from the passenger vehicle space, Mahindra and Mahindra Auto are the outperformers. And now talking about the underperformers, Bajaj Auto in the two-wheeler space so far has done just 60%. It's almost the same for Hero Moto as well. And even Maruti has just done 50% of the total sales that company had seen in the same month last year. Tata Motors, as usual, remains amongst the biggest underperformer. So we'll have to see how the registration pans out in the last week of June. But so far, after several months of underperformance, June is indicating that auto registration might be healthy.
Okay, auto registration might be healthy in June. Thank you so much for that, Sudarshan. But let's talk about delivery. That's also in focus today. Mangalam is joining in with us to give us more details on this one. Mangalam, we have a brokerage report here, right?
There is a brokerage report that has come in on delivery. That is coming from Jefferies. They've actually underperformed, or rather they've actually cut their target to underperform, and the price as well has been cut from 500 rupees to about 300 and a little over that. The reason why they do that is because despite the outperformance that we've seen in the stock, remember, ever since they've announced the acquisition of Ecom Express, the stock has rallied about 41%. This as against the Nifty, which has rallied about 8% since then. You know, the street has been optimistic about the consolidation in this third-party logistics space. But they see a risk here. What is the risk that they see is that, you know, one of their bigger clients, Meesho, has been insourcing their logistics, and as a result of which their market share in the overall third-party logistics, e-commerce logistics space is likely to decline at a time when, you know, e-commerce logistics volume growth itself is likely to be much lower than what it was in the post-pandemic buzz. So, for instance, volume growth for e-commerce parcels was 30% CAGR between FY20 to FY25. Jefferies believes this is likely to grow at just 10% over the next 5 years. And in that as well, delivery, because Meesho has moved a large part of its business to its own logistics party, and at the same time will continue to do that, delivery's market share will reduce to around 34%, and that provides a bit of a downside risk out here, despite the upside that is likely from the consolidation of e-commerce express. So put all these things together, they're slightly negative on delivery, and they've cut their target price. More importantly, for delivery as a stock as well, you know, a large number of funds own it, with a fair amount of funds which are looking to sell. So that liquidity risk is always there with the stock.
And the stock too, still 27% below its IPO price of 487. Mangalam, thanks a lot for that. One of those few newly listed companies that have not managed to see their IPO price since listing. But Vinny was highlighting some of the earlier names, be it the RECs, the PFCs, and the kinds, of course, on the back of those project financing norms that were eased. And Lata has taken us through this deep dive on what it means for these companies.
Well, the draft had threatened that there will be very high provisioning of 5% on all project finance rules. But yesterday we got the final rules, and they were far simpler, far easier. If for any new project finance loan, banks and NBFCs like PFC and IREDA have to set aside 1% of the total loan as provisioning. And once it's the old rules, as I said, the draft said 5%. Once they start operating, then the provision falls to 0.4%. In the draft, it said that even when they start operating, it should be 2.5% and gradually brought down. The idea was, of course, to build provisions during good times when infrastructure projects go bad during bad times. But the point is, the new rules, actual rules, are far simpler. Also, for commercial real estate, you have to set aside only 1.5% for project finance compared to the old 5%. If anything went bad and the date of commencement was deferred, then an increased incremental 0.37% of the loan has to be set aside as provisions for every quarter deferred. In the old draft rules, it would have been 2.5%. So all told, it's easy. Also, the new rules will apply only for forthcoming prospective loans which are signed after October 1, not for the old loans. So relief for NBFCs and banks.
Lata, thanks a lot for that. And as a result of which, all of these names, be it the likes of PFC, REC, IREDA, doing well. REC is up 3.5%. PFC is now moving to the highest point of the day, almost 6% higher on a PFC in today's trading session. IFCI too trading with gains of around 5%. So good going for a lot of these names. By the way, Endurance Technologies is now at the day's high, 9% higher on that stock, and remains the top gainer on the Nifty 500. Take a look at that spike that has come in the last 10 minutes or so. The stock, by the way, the Nifty 2 now above 25,000, 220 points higher, 700 higher on the Sensex as well. Take a short break. On the other side, we come back with all things commodities with Manisha Gupta. Welcome back. Shifting focus now to commodities. Manisha is here with us, and after talking about platinum, silver all through the week, gold felt a bit left out. So Manisha is here to talk about gold. Manisha.
Well, not exactly the gold prices though, but the notification that is coming in the Indian markets yesterday by the Indian government, where you now have a restriction on various ways of gold imports. Well, just to tell you that the government has curbed imports of palladium, rhodium, iridium, alloys containing more than 1% of gold by weight. For the longest time, many of these metals had way lesser import duty than gold, which stands at 6%. So even if you had 98% of gold and just about 2% of platinum or palladium, it was coming in the name of platinum or palladium with lesser duty being paid. So that was creating a lower, not a level playing field for the Indian players here. And in any case, this was coming under smuggling there. Also, what the government has done now is they have restricted imports of colloidal metals and also certain chemical compounds. What started to happen is that once it was plugged that you can't get it in the sense of other metals, a lot of gold was coming in liquid form in sense of chemicals. Now, that is something that the government also has ensured is restricted now. This is being done to prevent gold from entering into the country disguised as chemicals, as liquids, or as under in sense of smuggled. Also, this is being done to plug loopholes which were used to get the metals inside into the country. Remember, gold and silver is at 6%, but it is much lesser when it comes to many of these chemicals, when it comes to liquids, when it comes to iridium and other alloys as well. So with the notification that is in effect from immediate effect, this is all that the government is looking to plug.
Okay, Manisha, thank you so much for that. So that is an update that is coming in and a notification that came in on gold. But let's shift focus and put the spotlight on Dream, folks. The shares have been falling for the last couple of days. And, what is this actually the reason behind this? Yesterday, there were some articles that came in, newspaper articles, that seems like some of the major Indian banks and some of their clients, like ICICI Bank, Axis Bank, MasterCard, were looking to move away from that. After that, the company gave a clarification of not losing any clients. And they said that their negotiations were always a part of the business and as a process, an ongoing business process. But to talk to us more about this and help us understand this, we have Librata, who's the chairperson and MD at DreamFox Services, joining in with us on the phone line. Librata, good morning. Thank you so much for joining in with us. Like I was mentioning these reports that came in yesterday, right? And they said that these concerns that came in from some of these banks were mainly because of the disruption in services that was seen. One, are there any concerns coming in on that front? Are you in negotiations or any terms and renegotiations with any of these companies as of now?
Good morning. So first, I'd answer to your point on disruption, which happened, right? So I think that disruption, what we are talking about, was last year, and that was a technical. So it was more of the, so if you have seen that, we have this EDC machines wherein we actually have the process of checking on the eligibility of the card. So there was a downtime, and that was one of the reasons that, why. And we have also clarified and given the reasoning at that time. So if you have also seen that, even after that, I think all the clients are still with us. And the reason is because it's been a long-standing relationship, what we have with all the banks. They all understand that what is the value we bring to them. And second, most importantly, is that we are deeply integrated with all our clients, all our banking clients. And in terms of our contracting, if you have to see the process the way it is, that, we have our main contract, which is 5 years. Wherever our commercials are annually, it's on the annual basis. So, yes, there are negotiations on the commercials on the annual basis. It's an ongoing process.
Okay, so you are saying right now your negotiations are on commercial basis, what you all are talking about. Is there any contract that is ending in the recent time or during this year that you are negotiating as well with any of the banks?
No. So all our contracts are in place and all the programs are ongoing. So there is no such thing going on right now.
Okay. So there's no change in terms of contract as of now. None of your contracts are ending during this year, the 3 to 5 year time period, right?
No. And this is business as usual, So it's a common thing in a business where, your contracts are under renewal. There will be RFPs coming in. The negotiations are on. So it's ongoing and it's a business thing. So there is nothing change in the business structure.
Librata, good morning. Thank you for joining in. So, you're going on record to say that there has not been a single order contract cancellation, right, from none of your existing clients.
Yes. I mean, we have not received any such information from any of our clients that, they do not want to work with us. So, yes.
And any new negotiations to onboard newer clients?
Yes, there are a lot of new clients which have been onboarded. If you see that, in our last earning calls also, we clearly mentioned about not just the banking, but we also have onboarded almost nearly 30 enterprise clients with us. And not only in terms of the lounges or the travel. If you actually look at it, that, we have just announced our two big new services, which is our social club and coffee in the mall. So the reason of also adding all these new services is because we see a high demand coming in from our existing clients, because they also want something, a differential service for their card holders. So this is where the Dreamfolks is actually building better technology, new services coming in. So I would say that, our relationship and the way the business is actually in a very positive and a growing stage.
Librata, just circling back, I want to understand in terms of commercial side of the negotiation that goes on. Currently, what is it in terms of pricing? Are we expecting higher pricing? What are the negotiations going on, and when is it likely to be closed by as well?
So as I told you that, see, most of our contracts, the way it is either January to December or it is April to March, and most of them are actually closed. So it's an ongoing thing. So it's nothing different. And the way the price escalation happens is it depends on the, inflation there in the market. Right. Basis that the pricing is, the price escalation also happens. Okay. So there is nothing different which is going to happen this year.
Okay. And Librata, you stick to the 20% CAGR growth that you've spoken about in the past as well for FY26 and onwards?
Yes. So the thing is that, as we also mentioned to you that, we are also getting into a newer industry sector in terms of the clients onboarding, which is the enterprises, and also the new services. So, yes, as we mentioned that, in next 3 to 4 years, you will also actually see, the new services also giving us, I would say that a good percentage coming on our top line from these services. And yes, we stand by what we have committed earlier.
Okay, so that is the non-lounge services, right? Which you're looking to further grow over the next few years as well. And how much would that portion be? I think somewhere around FY24-25, it was around 7 to 10%, somewhere in that range. Yes, what would it be in the next couple of years?
So next couple of years, I would say that, in next 4 to 5 years, what we see is that it's actually going to be around 50%.
Okay.
Librata, since you had mentioned for the lounge services as well, you plan to grow, or you want to have that business as a significant contributor to your top line over the next few years. Where does that stand? You stick to that earlier guidance as well that you had mentioned in your earnings call?
Yes, we stick to the same, and it's not, because lounges are not just for India. If you actually look at it, that we all also expanded our network into 100 plus countries, and the focus is, when we talk about the lounge business, yes, it is not just limiting to India, but yes, it is a global market what we are talking about.
Librata, there is a lot of talk about competition as well, right? Large conglomerates are also looking to enter into this business. What would be the possible impact on your business going forward?
So I would say the competition is not now. It's been there from the time we started this business, and when large companies also saw opportunity into this area. I do not want to name them, but there were a lot of large tech players also who wanted to enter into this space. But I think that is a differentiator what Dreamfolks brings into the market, and the value what our clients have been seeing with us. And I think that is the trust and confidence what they have always shown and are trying to be with us. So I would just want to say that it's not that competition is coming in now, but there has been, this has been always there, and this is nothing new for Dreamfolks.
Absolutely. And just the last question from my side, at least, realization guidance is what I want to understand, right? I believe it is somewhere around 1,200 per customer who's there, who enters the lounge services. Does that stay intact? Where do we expect that moving now?
As I told you that, that of course would change because as the inflation is growing, right, and it impacts the inflation. So, yes, there are changes, but, I would not be able to give you the exact figure that what it is. But I think once we actually announce our report, and you should actually look at our quarterly report because we are very confident the way the business is shaping up now.
One final question from my end as well, Librata. You mentioned you're sticking to your revenue growth guidance as well. What about margins? Because they had narrowed in the fourth quarter. We ended the fourth quarter with 6.5%, 6.3. Do you get back to 8%, 9% levels anytime soon, say in the next couple of years?
So I just wanted to correct you there because that is not the margin what you're talking about. That's the EBITDA. So the margins were between 11 to 12 to 13% what we have guided, and I would stick to the same guidance and we'll try and maintain the same margins.
All right, Librata, thank you so much for sparing time and joining us with those important clarifications there on those news reports. And the stock too has recovered significantly from the lows of the day and has moved into the green now, as the management has clarified that there has been no contract cancellations from any of their existing clients. They've stuck to their guidance as well, all their contracts in place. And the street likes what Librata
I'm just Sudarshan is also mentioning it's 8% recovery from the lows, right? So good recovery from the day's lowest point is what we're seeing. But on that note, we're going to actually slip into a very short break. When we return, we'll discuss market technicals with Saumil Mehta of Mirae Asset Sharekhan and also discuss the trading bets. Welcome back to Trading Hour on CNBC-TV18. Nifty about the 25,000 mark. 25,010 is what the Nifty is trading at. Now, to understand the technical levels and technicals that we should watch out for, we have Saumil Mehta of Mirae Asset Sharekhan joining in with us for that. Saumil, good morning. And today we are seeing the 25,000 mark coming in for the Nifty. We're seeing overall the market is on that positive mood. But is this 25,000 sustainable this side? What are the levels that we're keeping an eye out on, as well as your top bets?
Good morning. Good morning to everyone. Hi. Yes, absolutely. I think I'm absolutely positive on the markets. It has broken off a small range which we've created, which Nifty has created in the last 3-4 trading sessions. A small flag, bullish flag. It has broken on the upside, but the larger range is still intact, which is the higher end is 25,200 and the lower end is 24,500. We are heading up. High top, high bottom formation has already formed. The next target for Nifty would be 25,200, 25,300 levels in the very short term. Bank Nifty as well. I think Bank Nifty will outperform from here on because the banks have just started moving up. ICICI is looking good. Axis, Kotak, all of them are looking good, and they will have the good momentum here. The support for Nifty now is slightly higher from 24,500, and now it becomes 24,700. That will become very crucial in the very short term, even in the medium term outlook, because this range was very crucial. So now, yes, buy on declines should be the strategy. 25,200, 25,300 is the target for Nifty.
Saumil, just before we ask you your specific stocks, just pull up Dream Folks. That is now up almost 2%. So that's almost a 10 to 11% recovery from the lows of the day. In fact, it's now up 3%. So almost a 20 rupee recovery that we've seen from the lows of the day after the management issued that clarification to us that all their contracts are in place and no cancellations have been seen so far. Saumil, good morning. Thank you for joining in. What about specific stocks from the large caps or from the broader markets?
I have stocks from the broader markets. It's just started moving up. Broader markets were correcting for the last couple of weeks. Now it has taken support at very crucial levels. So I'll be taking SBI Life. That will be my first bet. SBI Life has broken out of a small triangle pattern on the upside. Stop loss would be 1779. target would be 1920. The second one is MCX. MCX has also broken out of a small bullish flag pattern, taken support at 2040 daily moving average. Great setup. Stop loss would be 7840 and target would be 8200.
Okay, Somil, those are the stocks that we're keeping an eye out on. So thank you so much for joining in with us in today's trading session as well. Thank you so much for that. But on that note, we're going to slip into a very short break. And after the break, we'll discuss market fundamentals with Mukul Kochar from Investec Capital Services. So don't go anywhere. Welcome back to Trading Hour on CNBC-TV18. Markets are managing to hold on to around those 25,000 levels, about that mark as of now as well, almost near the day's highest point. Outperformance coming in from the broader end of the market. Mid-cap up almost 1%, small cap up 1% as well. And advance decline ratio today clearly in the favor of advances versus declines. Banks also something that is supporting the up move in today's trading session. So banks also holding on to gains of almost 1% as well, Hormas.
Since you're mentioning banks, look at HDFC Bank as well. That has been the one conversation over the last few days, and that's of course because of HDB Financial's IPO. They finally announced the dates yesterday and the price band as well earlier in the morning, and it's a 12,500 crore rupee IPO. So you just took a look at how these large, giant-sized IPOs have fared in the country. We had quite a few of them in the last few years itself, and the largest one on record within the country's IPO history has been Hyundai, which happened last year. That 27,000 crore rupee IPO, almost a 28,000 crore rupee IPO, listed in October of last year, a 1960 IPO price. The stock, even after 8 months of listing, is still at that IPO price. It's not moved anywhere from those levels. The high that it has made is also around about 1980, so no significant upside from the IPO price as well. And Hyundai overtook LIC as the largest IPO, and LIC when it came out in May of 2022, a large 21,000 crore rupee IPO, hyped to the skies, 949 rupee IPO price. And today too, the stock is around about that IPO price, but not before. It did make a high of 1200 plus, and from there it has corrected around 24%, and now it trades around about that IPO price as well. But one of the big value destroyers in the recent times has been Paytm, and that 18,000 crore rupee IPO that came out in November of 2021, a 2150 rupee IPO price, and it is one of those few IPOs that has still not seen its IPO price since it listed. Still down 60% from those levels, even after almost tripling from those 52-week all-time lows that it had made earlier this year. And since then, it has recovered from those levels, but still 60% below IPO price and 23% below its 52-week high as well. Back in the day, of course, Coal India for a very long time was India's biggest IPO, a 15,200 crore rupee issue, 245 rupee IPO price. And after years of underperformance, it is only recently that the stock crossed its IPO price. So still trades 60% higher. Of course, a very high dividend yield from this stock as well. And from those post-listing highs, which are in excess of 500 rupees, the stock is down about 30%. Another recent listing, Swiggy, 11,000 crore rupee IPO, 390 rupee IPO price, listed only last year. 7 months after listing, still around about its IPO price after recovering from the lows that it made. And even after it made a post-listing high in excess of 600 rupees, the stock is still down 40% from those levels. General Insurance Company was also another big IPO, almost close to 11,000 crores, 900 rupee IPO price, and the stock trades well below that. It listed in October of 2017, 60% below its IPO price. And another one of those names that has not seen its IPO price since its listing. SBI Card, of course, another one that recently crossed its IPO price, listed right at the start of the pandemic, a 10,000 crore rupee IPO that took place. And even today, the stock is above the IPO price and currently below the 52-week high that the stock had made recently. And lastly, the most recent one of them all, NTPC Green Energy, of course, a 10,000 crore rupee IPO, 108 rupee price, still at the IPO price. November of 2024 is when it listed, and from the post-listing high, which is around 150 rupees, it's down almost 33%. So, as they say in one of those very popular ads, "Bada hai to behtar hai," not necessarily.
Not always.
Not always. And you can, hopefully, HDB Financial might just change that trend. And we'll take that question forward with Mukul Kochar from Investec Capital Services, who's joining in. Mukul, good morning. Thank you for joining in today. And the big talking point, of course, has been the HDB Financial IPO. And what would be your view on this, right? It's a large IPO. What do you make of the price band that it has been put out? And will this finally buck the trend and eventually tell us that, okay, a large IPO can also generate returns for investors?
Yeah, so interesting statistics there, by the way. So on HDB Financial, we really don't have a strong view. We are not one of the banks on the issue, so I would not give a very pointed comment there. But broadly, on the IPO cycle, what happens is it's like a cycle, like anything in the market. And the larger IPOs happen towards the fag end of the IPO cycle, when there's a lot of excitement and big money comes in and bigger IPOs get absorbed. And that is when, there's overexcitement, and that is when the pricing dynamics actually fail. That's probably one of the reasons why you're seeing the returns being tepid in large IPOs. HDB Financial, just one comment, comes from a very respected house. So there will be some pricing premium based on that, but performance has been a little tepid in the recent past. So both these dynamics will be taken into account as the bankers price the issue.
Absolutely. There are factors that I have to take into account as well. I don't seem bada hai to better hai. Whoa. That dialogue of Hurma's hoping that it doesn't turn out to be true even now. But Mukul, good morning. This is Vinny joining in the conversation as well. I just want to understand overall financials. We had those RBI norms that came in for project financiers side as well. What is your story, or what are you expecting coming in from the financial front? Whether you would look at PFC RECs, PSU banks, private banks, NBFCs, what interests you in the financial pack?
So the financial pack per se, definitely, barriers to entry and competitive advantages are at play, as scale is a clear sort of, differentiator here. And scale is a differentiator across multiple points. Its cost of deposits is better, for the larger banks. Then, your OPEX is better as a percentage of AUM. So they're just able to price risk better. On top of that, they also have access to the better customer pool. So what's happening is the market's understanding that, and clearly the larger banks are trading at a higher band or higher price to book than the smaller banks. Now that itself then in a circular loop gives them a competitive advantage, because since they can dilute at a higher price if they want to grow higher or at a faster rate. Their cost of raising funds is lower, or equity funds is lower. So having said that, advantage larger banks, mid-market banks, they're selective ideas where we are active, but largely, we are focused around the larger banks, because that's where the barriers to entry and the competitive advantage is clearly showing. With the mid-market banks actually trading at book or below, the story seems a little challenged. Yeah. On the government banks, a very controversial. Next 2 years, of course, earnings are going to be under stress, because they've taken write-backs benefit. There's also an adverse rate cycle which they're facing. So consensus is that they will see substantial NIM pressure, and earnings growth will be tepid. I feel the contrarian view that that things may turn out better, and the worst is priced in for the next 2 years, and the market may look beyond that to FY28. And on that basis, these are still double-digit ROE banks trading at or below book. So valuation support is there. So I'm actually personally in the camp that PSU banks deserve a look.
Mukul, I was just reading a report a few days ago which spoke about a $40 billion consumption boom that is lined up in India because of the various steps that have been taken, the budget cuts, the rate cuts from the RBI. But on the flip side, there are also reports that unemployment is on the rise. But if you take a look, do you see a potential for a consumption boom in the country, especially because the macros don't seem to suggest otherwise, because unemployment being on the rise? Do you see that being confined only to the premium space, the premium consumption, or because of the fact that there has been a rate cut from the RBI and this tax boost as well that has come from the budget, you would see the lower entry level, mid-income sort of consumption also get a boom because of this?
So again, a very hotly debated topic amongst investors. My view that we are moving towards more a savings investments economy. Market, by the way, market prices are reflecting that. You've seen returns getting better there. And if you're going to do a savings investment-led economy, it's going to come at the cost of consumption. So I tell people overall low consumption is a feature, not a bug of this economy that we're headed into. And that is what, and the second point is, we historically have been a consumption economy, less investment based economy. So in that case, all the consumption stocks are fully scaled. Yeah, some of the largest market cap companies in India are consumption companies. So these are fully scaled companies. On that scale, growth in a weaker consumption environment is lower. Multiples are exceptionally high, so these stocks will struggle to work in the medium term, next 3 to 5 years. Within the pack, of course, as you said, premiumization is a definite theme. So even if overall consumption grows lower than GDP growth, because savings investments grows higher, premiumization, I think, remains a solid trend. You can see that in autos, you can see that in the hotel industry, you can see that across the board. The premiumization actually still remains a solid trend amongst a weaker consumer overall.
Okay. Premiumization is a trend that is remaining solid for a while, is what you're expecting to see going forward as well. Mukul, what's your thought coming in for something like the food delivery apps, whether you talk about Swiggy or Eternal? These are two options that we have right now. What are your thoughts on this one? If consumption improves, do you think we're going to keep clicking a bit more in terms of ordering our food online as well?
So clearly, just fair disclosure, we don't cover these stocks yet. So, but broadly, I can tell you that, e-commerce in general is reducing friction, there is a definite play there. It opens up new avenues for the consumer in sort of, consuming at home. Definitely a solid play. Again, we believe that the trend of eating out or eating at home or ordering from outside is going to increase as overall well-being improves in India. By the way, just on the, and this is all related, just on a consumer who can consume more at a premium end, if you look at the demographic of the premium consumer in India, that demographic itself is growing at 12 to 13% CAGR. So the demographic, as in the number of people who are able to consume premium product, is growing at 12 to 13%, whereas overall population growth is much lower, maybe in the 1% handle. In that case, you add some inflation to that. Most of these companies which are sort of, exposed to more sort of different and more sort of premium consumption inherently start with a double-digit revenue growth expectation. So per se, anything about, consumption from outside, all these are similar trends, which is basically a consumer that is moving up.
Just as you spoke of premium consumption, Mukul, Vinny already placed her order for lunch on her phone. But thank you so much for sparing time and joining us today. Look forward to having you more.
All right, thanks.
Thank you so much for joining in, and take a short break here on Trading Hour. Back with more on the markets on the other side. Stay tuned.
Welcome back to Trading Hour on CNBC-TV18. We're seeing the market at 25,030 levels approximately. But earlier on in the day, we spoke to seasoned market investor Pankaj Shibrawal of Ikigai Asset Managers. And he's sharing his view in terms of the mid and small cap. Where does he see opportunity coming in? Listen in.
7 out of 10 guests that I speak to, they still say that no, large caps offer better comfort. And there's still some overvaluation in SMIDs, as they're called.
So
small
3
and
points I
mid-caps.
would like to draw. And we mentioned in our quarterly newsletter, which I published in April, that on the headline basis, when you look at valuations, we acknowledge what people are saying, that mids and small caps are expensive to their history and versus large cap. So there's a relative margin of safety there. But I think devil lies in the details. So if you go a little deeper, what you find out that earnings growth in mid caps especially has been faster in the last 5 years. Even in FY25, which was a slow year, mid caps earnings grew at more than 18-20%. And going forward also, our expectation is that mid caps and small caps can offer better earnings growth than large caps. That's the one part. The second part important is the composition of the profit pool. So if I look at the top 100 companies, 52% of the profit is coming from PSU banks, private banks, oil and gas, and PSU sector, which are generally low P in nature. And that representation in mid and small cap is to the tune of 15-16%, 17%. So generally, when you look at X of these sectors, Nifty is trading at a premium to mid and small caps. So when you do a apple to apple comparison, and the third part is, when do they trade at a huge discount? Take 2018-19. You came from a huge bull run in 2017, and then you started seeing solvency issues, right? You had Yes Bank, DHFL, all kinds of skeletons were coming out, and there was a scare of solvency. This time in now last 5 years, the debt to equity and the leverage position of small and mid caps are far, far better in many cases compared to large caps also. And the last point which I want to drive, Surbhi, is that mid and small ab utne chotu companies nahi bache. Now the definition is up to 33,000 crore market cap is a small cap. Up from 33 to 1 lakh crore is a mid cap. So and they are sectoral leaders. You take tires, you take hotels, you take airlines, you take so many sectors like infra, capital goods, auto ancillaries. All these companies are classified in mid and small, but they are sectoral leaders in the sector they operate in. So I'm saying that the cycle and the texture of the market has changed. There are pockets of bubbles. I am completely acknowledging that. But it should not be painted with the same brush that everything is expensive and everything just sell and move away. I think in this market where 5,000 listed stocks, take out the top 100 stocks, you will find at least 40-45 stocks at any point of time, which will give you that kind of a value to ride on. So I believe that you have to be a stock picker, as you rightly mentioned, and there are opportunities in the market which will make you money over a 2-3 year period.
This is very interesting because you're the second person that I've spoken to, I think, in the last 2-3 weeks, who has actually said that Indian stocks are not necessarily over expensive. I remember meeting Rhythm Desai at the Morgan Stanley conference, and he actually went on to say that Indian stocks are cheap. And I was like, wow, that's
I won't agree to cheap, but I mean, you have to search your pockets. And I think ये मेहनत करने का time है. For you have to go at the ground level, search for companies, search for good promoters. And coming to your second point on what to do, I think over a period, what I have learned is that process of elimination is far powerful than process of selection.
On that, let me ask you, because you just said that there are still maybe some pockets where, things are a little overheated in the small and mid-cap space. So can we sort of rule them out? I mean, do you see, I don't know whether it's maybe defense or are there certain thematic areas where you do see excesses? Which ones would those be?
So, for example, one of my yardsticks is, for example, cash flows. So look at few of the EMS companies trading in India, right? Narrative is very strong.
90 times P, 100 times P.
110 times P. But when you open their cash flow statement, not all I am saying, but many of them who are trading between 25, 35, 40,000 crore market caps, the cumulative cash flow over the last 5 years, operating cash flow, is not even more than 50-100 crores, right? That means it's a thin margin businesses, but they are hugely deploying money in working capital to drive growth. So I think that's something we need to be, I'm giving as an example.
Something to be cautious about.
That narratives will work for a while. But finally, top line is vanity, bottom line is sanity, and cash in bank is reality.
Is the reality.
So cash flows you can't ignore at the end of the day. Yes, for 1 year, 2 year, there could be aberrations on cash flow either sides, but over a cumulative 4-5 year period, cash flow is something we need to be taking cognizance of.
Welcome back. 250 higher on the Nifty, almost 700, almost 800 higher on the Sensex now. The broader market's doing fairly well for themselves as well, seeing a bit of a rebound after that sharp sell-off in yesterday's trading session. But we call time on this edition of Trading Hour. Vinny and I take your leave. Thank you so much for watching. Halftime report on the other side.